Okay, good morning, everyone. Thanks for joining. Let's kick off the session. So I'll just walk through a couple of updates as per usual. I think this week market is up. S&P up 3.4%, and then QQQ up by about 2%. I think the prior week is much worse compared to this recent week, right? We skipped one session last week, so that's the market situation. I think this one is just preparation for some of the questions that people ask lah. I think let's jump straight away to the questions lah. Okay. The first one. Welcome back from the break. If you were to trim your entire portfolio to just 5 stocks in the current climate, which 5 and why? Boon Song, you want to go first, or anyone want to share what was your top 5 picks or any companies that you think that is interesting to mention? Or Boon Song, give me a no. Or Mr. A, you want to share what's your, let's say if you are going to trim left with 5 companies, which one will you go for?
Wow. Okay, DBS.
Okay.
Yeah, maybe Maple Tree Pan Asia Commercial Trust. Yeah. Wow, this is a tough one. And maybe two growth stocks. I would think Microsoft and yeah, maybe Microsoft and Alphabet. Yeah. Wow, but it's very hard to say. Yeah, and maybe Coca-Cola. Yeah, but not at current prices lah. Yeah, like in an ideal scenario, I think I would like to own those companies: Microsoft, Alphabet, and Coca-Cola.
So right now you don't have positions, right?
No. Reason being, I just feel that they are very expensive lah.
I see.
Mm.
Anyone else want to share? I see a couple more other joiners here. If you can unmute and share if you are interested. Okay, then I think no. Okay, and then I think for myself, I prepared this one just to show my current positions. I have this updated as frequent as possible. I think for me, I'm happy with my top 5 positions, which is all these top names, right? Like Apple, Microsoft, Amazon, TSMC, and Tesla. So these are mainly US tech stocks, with the exception of TSMC. TSMC is Taiwan companies. So these are mine. I think later we will, there are some questions asking about all these FANG stocks, and maybe we can give more detailed commentary later. And just for a quick update on the portfolio situations, right? I think this one, usually people are quite interested. My portfolio peaked at about, end of last year. So now we are getting into November. It's 1 year now going into this very, how to say, consistent downtrend for a year already. Let's see next year how it goes. And then in terms of the comparisons of these companies, right, you can see that actually since 1 year ago, I think none of these companies are doing that well, with the exceptions of Apple, which is flat throughout past 1 year. But the rest, right, I think Microsoft down 28%, Tesla down 36%, Amazon down 40%, and then TSMC down 46%. I think my portfolio just got whacked for the past 1 year. So that's the situation. Any questions so far on all these that I've been sharing? If not, we proceed to the next question. Any thoughts on Meta? Does this deserve such a brutal beat down? Also, any thoughts on China stocks? Okay, we break down these two. First one is Meta, and then second one is China. Just want to check with Boon. So have you looked at Meta results, or Mr. A, have you looked at Meta result that you want to share?
The number of active users dropped for Facebook, so it probably deserve this kind of rating. But 20%, I'm not too sure. 20% is too much.
I think it didn't drop. It's almost flat, right?
No, it dropped a bit throughout all the regions.
Monthly active user.
Yeah, I think it did.
Which one? This is revenue.
Or is it daily active user? I can't remember because I was never really that super interested in Facebook. But the number of active users did drop.
Okay, these are all increased, right? You see the daily family monthly active people, MAP. This one increase. Family average. This one is average revenue. This is the daily active.
I think the region, this is the one you want to look at.
But this one is increase, right?
Increase,
Yeah.
I stand corrected. Yeah.
Yeah,
But the growth
stagnant,
maybe slowing lah. Nobody really. It's not going to be numbers that are going to jump in the future.
Yeah. So this is the one that you pay attention to, the user growth.
Never pay attention. I just going to read through very briefly what's going on. Yeah.
I see. What about Mr. A? Have you looked at Meta and anything to share?
I don't really follow Meta, but from what I understand, it has been facing a lot of competition from TikTok, right? Am I right to say that?
Yeah, that's my understanding as well.
Oh, okay. So I mean, I'm wondering, okay, so TikTok, because I'm not very familiar with all these youngster things lah. So I guess from what I know, TikTok is a app where where it allows you to take 30-second videos, right?
I think
And then
okay, it's short form video. I think it started out very short, but I think now they lengthen it already. I don't recall what's the length. I think probably can be
so
up to 3 minutes or something like that.
yeah, actually, in terms of the function, right? I don't see what's the big deal about TikTok. Like, okay, what TikTok can do, right? Facebook can also do, right?
Mm.
Am I right to say that? Like,
Which they have the reels, right? The
yeah, exactly. So
almost
it's
the
like
same.
yeah. So and Facebook there is unlimited, right? Like you can take a video however long you want, right? You can even Facebook Live and all that, right?
Yes.
So I'm just surprised that you know TikTok is eating into their so-called market share or whatever you call it. Yeah. Because in terms of function, Facebook is more capable, right? So to speak.
I think it's very different in terms of how they structure. So come back to Facebook, right? It started out with social media where you connect with your friends, and then basically you just have your friend groups, right? So when I'm posting, I expect that only my friends will saw my post, and then when you post, I mean it's just among friends, right? Then of course, it changed over time, and then there are more, like so-called influencers, especially on the Instagram, that there are people who like how to say it, like influencers. Basically they post, people follow, and then they can actually help to promote some products and so on, right? So that's but it started out as a friend circle, not so much as like a recommendations. Whereas for TikTok, I think it started out like I think I still remember the first time I downloaded TikTok, I was like, what is this, right? Like it started out with just okay, straight away the video is playing already, and then the only thing that you can do is swipe away. Like you swipe to the next video and you just watch, and then if you like it you watch, you don't like it you just swipe away, right? So that's how it works. It's very simple. You only have one control, but I think the back end infrastructure is very different, because for TikTok, I think the strength is that just based on what you watch and what you swipe away, right, they will very quickly know what you are interested with, and they also know like the short form videos, which one is very engaging and very addictive for the audience. So they will viral those that is super popular videos. That's why they catch people attention, and you would over time, after they understand your habit and your preference, right, they will just keep feeding you stuff that you really like, and you're stuck there like just swiping watch video. And even though one video is like 30 seconds, sometimes you just sit there for 30 minutes, 1 hour, just gone very fast, right? Because of how engaging the content is. But it's still based on the recommendation, not so much about like I use the TikTok to follow my friends, right? Yeah. So it's very different.
Yeah, I see. Well, actually that makes sense. They keep it simple.
Yeah.
And yeah, I think that's their strength.
Yeah, and it's really how to say it, it's really for the it's very different. Like the recommendations engine will be very important, because whether people will think that okay, if they keep on feeding me videos that I don't like, I'll just walk away, right? So the recommendation is something that's very different. For Facebook or Instagram, like I said, they used to just connect friends, not so much about recommendation, but now they are also moving into all this recommendation. And I think if we put in YouTube as well, right, I think also quite interesting, because YouTube used to be like, okay, if you just subscribe to the channel, and then basically when you log into YouTube, right, you just look at your list of the channels that you subscribe to, if they have posting, and then you will see because you subscribe to their channel, right? But now, if you notice, I think this is not now, like, it's like, I think has been ongoing for maybe a short couple of years already, is that they also have these recommendations whereby you log into YouTube, right, you don't see the list of the channels that you subscribe. You look at what they recommend. Like, okay, this is my recommendation for you, and you just click on. And those recommendations are not the videos that you or channels that you subscribe to. These are the videos that similar to TikTok is what YouTube think that you are interested in, and then they'll just push to you. And that's why that there are people's, I mean, since a couple of years back, they already say, actually, the subscription, right? For example, I post my video in YouTube, I ask you to subscribe, right? Actually, you subscribe or not subscribe, actually not so important one, because most of the people, they log into YouTube, they will just look at, okay, these are the one that they think you are interested. Then you just watch those, right? So the subscription doesn't play a great role in terms of determining how many people will watch your content. Whereas let's say if you just post a video, even though I have 0 subscribers, I post a very, like, how to say, popular video that goes viral, right? It will just push to many people and people will watch those. So subscription is getting less and less important, and the recommendation is getting more important, which is all like moving towards recommendations way of content, content, how to say, they push the content that way. Yeah. So that's some difference.
I see. So it's more like timely, more up to date.
Yeah.
Way they preach.
Someone
So
say
now
something?
the meta PE is quite low already, right?
Yeah, this the thing quite low. Actually, just now, is there someone just asked a question?
Yes. Hi, Boon.
Yeah.
Hi, Boonti. Jay here.
Hi.
Can you hear me?
Yes, we can hear you.
Oh, hi. Yeah, I just maybe do a quick sharing of my view on Meta. I think the headwinds for Meta is really strong at the moment, which I will split into 2 areas lah. I think one is what you guys have pointed out, is the family of apps. So I think right now, Instagram is facing very fierce competition from TikTok. That's why they came out with this Reels. And I think it's very evident that TikTok is really eating up a lot of market share. Otherwise, I think Facebook wouldn't come out with, or rather Instagram wouldn't come out with Reels. And also likewise for YouTube, they wouldn't come out with YouTube Shorts. I think right now, the issue about TikTok is they are capturing all the younger audience. I think at this point, yes, the younger audience may not have a lot of spending power, but then if you are talking about maintaining the longevity of Facebook or Meta as a company, they may have to start targeting this new batch of generation, because in 5-10 years time, these people will be the ones stepping into the working world and starting to spend money. Yeah, so that's one big headwind lah. Then the second area which is concerning for me, at least, is I think Mark is shifting his attention away from this family of apps. I think at this point, the family of apps is reaching a plateau. As you can see, the daily active users, or even monthly, have been rather stagnant. So they shift, or rather Mark shifted his attention to the metaverse, which is the reality lab. So I think if investors who have looked at the numbers in the latest report, I think it's a bit concerning, because reality lab is choking up a lot of money losses, while at the same time their revenue has dropped. But I know a lot of big tech firms in the past, they were also at loss, and then one day they make it. So my view is that right now is we are entering this transition period. I think to Mark, at this point, a lot of people think he's crazy or like a fool. So we will know in 5 or 10 years time, he may be seen as a genius, or it could be a downfall of Meta, just like some other past social media platforms like MySpace, MSN, etc. Yeah, so that's my view. Yeah, it's really a transition period, and I think investors have to evaluate to see whether they believe in Mark's vision at this point or not in terms of metaverse. Yeah, thanks.
Yeah, thanks, Jayden.
I'm just wondering. Okay, so let's say in future they have this metaverse, right? Then will it render their current apps like Instagram, not render them obsolete, but compete with their current apps like Instagram. You know, like if everyone's spending time on the metaverse, then who will bother about Instagram? You know, I don't know. Does it work that way?
I think this is not their worry, because imagine that if the metaverse is really becoming something that the next platform, right? Say for example, we move from SMS to WhatsApp, right? If you won't be worried about the SMS anymore, because you just want to be on the next platform, right? The new platforms that everyone is there, right? Because ultimately, I think Facebook or Meta is still advertising companies. As long as they can get the engagement, meaning your eyeballs, right? Then they are able to earn monies from that. I think that no doubt on that, right? The question is like, can this metaverse become really a big economy, a big platforms that everyone is on it, or could it be that yes, this is the right direction, but maybe they get in at the wrong time, or this is too early or too costly or no tractions? I mean, these are the risks that or uncertainty that we need to be aware. But let's say if it is the things that what Mark Zuckerberg said it will become, meaning that it will become like a successful platforms, right? I don't think all this Instagram, Facebook, WhatsApp, I don't think these are important anymore, because everyone will just move to the new one, right? Yeah.
You know, what interesting is, if I'm not wrong, during the conference call, Mark, or rather in the report, it mentioned that the losses for Reality Lab will increase more next year. So this shows how much belief he has in this metaverse. I think it's almost a point of make or break the company at this point. Yeah.
Yeah, definitely. Actually, just to add on what you just shared, I think those that you have just shared, I think those are very good points. And we just look at the situation right now, right? Actually, we are already considered entering a recession. And as you can see here, especially for Meta, their revenues has been dropping for 3 quarters already. It used to be like 33 billions and then 27, and then okay, revenue still okay, but they mentioned a couple of times that there's already drop this in the ad spending. So some of the spending, I think they went to like Amazon or maybe some Google search, other channels. So they are facing some headwinds just on their existing legacy business, right? And then usually during these times, what investor want to see is that, okay, you see there are quite a number of companies already cut some headcounts and cut some employees to do some cost control, right? But for Meta, we see that they are struggling in terms of their top line, but in terms of expenses, they are not slowing down. So I think when we talk about expenses, there are a couple of parts, right? First are those related to their legacy business, and then the other one, which is the metaverse projects, right? I think both of these are not slowing down, like both are increasing. And then if you just project what they guide for next year, right? I think in terms of revenue, we are expecting flat or even drop slightly, or even just go up slightly. But in terms of the expenses, they said, okay, we're going to go increase. And they mentioned the word significantly, you know, the capex in terms of all this will increase significantly. So I think that one, you just project forward, you see that the earnings is expected to drop. So that's why investor, those especially those who are not confident in terms of this metaverse project, they will just run away first. I think actually I'm considered one of them, because I think it's okay to have some side bet. I think companies like Amazon, Google, they always have all these side bets that they throw a couple of 100 millions here, a couple of 100 millions there, add up together maybe a couple of billions a year on all these side projects, right? But I think in terms of the magnitude, Meta's spending is really a bit too much, and it will be very, very big if you compare to the level of net income that they have right now. So I think that's why there's a bit like panic in terms of the investors say, oh, okay, sorry, I'm not going to bet on this metaverse together with you. That's why they bail out first. I think that's the current situations. Like, just add to the point of what you have just shared and what A just mentioned. I think that's all I want to share. But I think this chart that I want to point out, right? Because I'll actually point towards, for those who are watching this, right? You can watch Adam Khoo's video. He has just recently released 2 videos on metaverse. He's still very bullish on the companies. So that's the backdrop, right? I think there are people who are bullish, who are bearish. And then for the bearish one, you can watch the investing channel. I think he really whacked Meta very, very seriously and said that you should run away. This is not a company that you should own. I'm closer to the bearish side. I sold Meta since beginning of the year, and I have no intention to get back because this metaverse project, I think, is too uncertain for me to take on, and it's too big. It's like really make or break situations, which I don't have convictions on. And then the other things that I want to point out is the free cash flow. I think if you look at the DCF formula that Adam Khoo shared in his second Meta videos, he actually still use the old, the old free cash flow numbers. But if you look at their most recent free cash flow numbers, right, it's already like, dropped from 12 billion Q4 last year to now just 173. So this is because there's drop in the operating cash flow, and then there's increase in capex, right? So now it becomes like it's almost break even. If next year it becomes negative, right, it's totally possible, right? Because if they have more headwinds in terms of their ads revenue, I think, and then if they just increase their spending, right, I think this one can drop to negative easily, right? They can say that this is temporary, it's not like a long-term thing, but I think whenever free cash flow drop from positive to negative, many investors will actually like run away. So just pay attention to these numbers, and let's say if we have another big drop in Meta over the next 3 to 6 months, I think this is the number that you want to pay attention to. Okay.
But the reason it drops is because of the purchase of PPE, isn't it? Like,
yes,
it moves from 5 billion to 7 to 9, and
yes,
that only drops the free cash flow, which is what is expected. So it's not the case whereby the operating cash flow is actually dropping. It's the increase of buying of capex.
I think both, right? You see this one, what I'm showing here, this is increase in the capex, right? And then the operating cash flow also drop, right? So I'm just referring to this table here.
Oh, okay.
Yeah. So in terms of the PPE, I think they mentioned that now they are entering a cycle of investment, so they have to buy all these equipments, machines, just to help them with their AI. I think the thing that they're facing now is that because of the iOS changes, right, they can't have as much data that they had earlier. So when it comes to ads targeting, they are weaker now. So they have to spend on all these AI things to make up for it. So that's why they have all this increased spending that they cannot afford not to make. So they have to spend on this, use the recommendation engine to push to increase the effectiveness of the ads spending, right? And then that's one thing, right? And then the other thing is that the macro things, which is like, okay, it really affect their revenues. I think engagement level is increasing, what they shared in the earnings call, but it doesn't turn into profits. So that's the things, right? Yeah. Okay, let's move on.
Sorry, I have a question. This metaverse that Meta is creating, right? Are there any other companies that are also creating this metaverse?
I think this one really depends on how you define, because the entire metaverse, what it is, right? This is still a very new area that very hard to define it clearly. So if you see, there are quite a number of companies that work on different things, but can be defined as related to metaverse. For example, some would say Roblox is also a metaverse companies because of the how the games works, right? So that's one thing. And then I think there are other companies that focus on this. For example, like Snapchat, when it comes to, VR, AR stuff, I think they are quite into it also. So, and then also, of course, if you want to bet on the metaverse, some will say better don't bet on this company, but bet on companies like Nvidia, because they will have the machines that powered the metaverse, right? So I think these are also can be considered metaverse investment or exposure if you want, right? So very hard to define. I'll say.
Yeah, I don't know whether you guys remember Second Life. Second Life by Linden Labs, year 2000 or so. It's still around. So when I see metaverse, it just reminds me of Second Life. So that's why I'm not that bullish on metaverse. I think it's going to be very niche. At least that's what the experience is with Second Life.
Yeah. I think we are all waiting for the killer app. I still remember when we moved into, you know, the smartphones, it could be like Android or could be iOS, right? I think the really the killer apps is, at least from my own personal experience, is that number one is WhatsApp, because you no longer need to pay per message when you are using the SMS, right? So that's one. And second one is actually the Viber app, the Viber that allow us to call as long as we have Wi-Fi. You can have unlimited call, right? So these two apps, I really buy a smartphone because of these two apps. And I'm already considered the slow one, because I think when there are other friends that are already using smartphone, I moved into it in 2011 or 2012. And these are the two apps, right? But for Metaverse, I think we are still waiting for the killer app. You know, the app that you cannot afford to not have it. You have to buy the you know, the device, because you need to access the apps, right? So I think that's the things that still yet to see lah. And hopefully we will see one within the next couple of years lah. Okay, that's Meta. Let's move on, yeah. What do you think of recent Amazon earnings and your plans with current positions? Looking to add slowly, hold or cut? Okay, since Mr. Typical Singaporean, you are here, I also want to hear your opinions on this. Amazon.
Opinion hasn't changed lah. So yeah, the earnings were disappointing, but I guess that was expected in this quarter or so. So buy the dip.
So do you think that the result has been improving, or I think, let's say, based on your expectation, right, is it like improving or like very like way below your expectations?
I mean, I'm not going to look at one quarter and make a decision on the matter. So I'll usually look at the audited financial statements for the year to make a determination whether or not they are moving in the correct direction. Such a big company, you look at one quarter, you end up trading it.
Yeah, exactly. So okay, do you have anything to share on Amazon? Anything that you are following, get excited on, or just follow passively?
Well, no, I mean, everything that I've shared 2 weeks ago. So I don't think I have any new things. I mean, people are saying that the growth of cloud isn't as large as expected compared to Google and Microsoft. To me, even though it's smaller, it's still actually larger nominally. And furthermore, my cloud is a large purchase of Microsoft and Amazon, so I actually don't really bother about it. Anyway, my bull thesis on Amazon is not about cloud. Cloud is just the free cash flow generating platform. My bull thesis now is about the ability to deliver products to the world. That is about it. Yeah.
So the logistic business.
The ability to cut out all the middlemen from producer straight to consumer.
So I think this is the aggregator theories, right? Like they basically stand between the customers and the producer. It could be e-commerce in terms of the items, or it could be content in terms of the, you know, like the delivery of content, for example, like the Prime videos. And it could be in terms of services, for example, they are standing between, you know, on one hand is the users that using all these different type of services. On the other hand are the software providers, right? So they become a platform essentially. Those are the aggregator theories, right?
Yeah.
I think a similar view as well.
There's something. How do you see a quarter's result and make a decision? The infrastructure still arises and stuff like that. I mean, if you look at quarter by quarter, you're gonna go crazy sometimes.
Yeah, that's true. So I think since like people ask about this, I also just quickly go through the financial. I think for Amazon, very interesting, right? They actually share the presentation slides, okay? A very ugly presentation slides. And then during the earnings call, they walk through the slides, I believe. And of course, there are Q&A that's not related to the slides. But to be fair with you, to be honest, right, I think that slides, right, is really, really bad slides. So I would suggest to whoever listening to this, I say just skip the slides and just click into the, you know, they call the earnings release, something like that, which is this document that I'm sharing here. So you see, this is Amazon announced third quarter results. So they have all their their details here. So just a bit of background, right? I think Amazon, right? This is the company since Bezos' time. He mentioned that please don't do slides. Like in their companies, they are not fond of creating slides for the sake of presentations. They say for anything that you want to do, you write a memos, and he famously said about the 6 pages memos, right? So this is how they manage the business internally, and they always say that okay, it's not just a memo like a normal memo that you write, right? It's like you have to see things from the end outcome. For example, it will be a press release. Say, for example, you want to create a product or you want to create services, you start to write what will be the press release, which is something like a communication that you share with your customer, right? So this is how they work up. And then in the memo, of course, you have to put in enough storyline, the narratives, how things connect to each other, and hence this is how their culture is within the companies. So when it comes to the earnings call, I realized that the slides is totally almost useless. But these things, right? I think this will somewhat close to the memo. At least there are more words, descriptions, stuff that they shared in terms of what they want to communicate within the quarters, right? So they start with talk about all these net sales, operating income, and so on. And then some are the key highlights, right? They share about okay, they talk about obsessing over customer experience. So what are the details, right? So you actually can see there are quite a number of details that happening in the companies because they work in a very decentralized manner. So there are a lot of things happening behind the scenes that actually all these things, right? There are many things that people don't talk about because it's just happening behind the scene. Yeah, quite a number of them. But the most important one, right, is actually you go back to the last one. I think this is where they share the operating results. And just to help you understand their operating results, right, there are mainly 3 segments, right? So the first 2 segments are the e-commerce business, and then the last one is the AWS, right? So if you just look at this very convoluted table, but at least you can get a good sense of the how to say the strength of the business. So if you look at the North America segment, I think this is like US e-commerce, right? This is their sales number. So the sales number is actually increased by 20%. I think these are good. But they also show the operating income, right? I think this is even the North America segment, this is like they're turning to negative operating income. So they are still facing all this overcapacity problem that to try to resolve. I think this one will drag until next year, and hopefully they will turn profitable. And I think just profitable or break even is not enough. They actually have to increase this at least to like let's say 2-3% net margin or operating margins with respect to their sales figures. I think this is what as an investor I want to see. But right now we are yet to see that. So they said they're going to improve and cut some costs. But in terms of tractions, there's still not much traction there. Okay, and then when it comes to the international, I think this is the mainly European e-commerce and others, right? So in terms of growth, I think they are doing well, like 12% growth. This is okay, given that we are entering recessions. But when it comes to the operating income, I think they are deteriorating. So I think this is, again, bad result. And then in terms of the growth, aside from the growth which exclude the currency, which is what they call the constant currency, you also want to see this column, which is including the currency impact. I think for a number of companies, including Microsoft, Google, you can see that actually all of them suffer from strong USD, because whatever revenue or income that they have overseas, when you convert back to USD, right? Because USD is stronger, so it will look much worse when it comes to the as you include the currency impact. So you can see these international segments, right? Although net sales increased by 12%, but if you include the currency, it actually dropped. So you see, these are the stuff that the currency impact. And then, of course, lastly is the AWS segment. I think they're still growing, but you can see that the growth has been slowing down. Just last year, they are growing at like 40%. Now suddenly become 28%. I think this is like quite a significant drop in terms of their growth rate. And if you include currency, it's 27%. Operating income is year on year, it is flat. But if you look at sequentially, meaning that last quarter or the quarter prior to that, right? Actually, there's been dropping, operating income has been dropping for 2 quarters already. I think that's one of the reasons like we have a steep sell-off, because these 2 are bad, right? This one, since a couple of quarters ago, we can see that already. At least 3 quarters I've been observing. So when things are bad, people kind of expecting it will be bad. So which is fine, okay. But this one, things has been doing well, but now turning worse, right? So that's why the share price drops. So I think this is mainly Amazon result. And when it comes to the questions that have been asked, right? Like so looking to add slowly, hold or cut. For me, I'm definitely not cutting, because like what typical Singaporean just mentioned, right? In terms of their mode, in terms of their business, long-term wise, they have no problems. So they are still doing okay, still intact. So that's I won't be selling because their long-term strength is still there, right? So definitely it's either whether I want to buy a lot now or buying slowly. So for me, I will buy slowly, because you see all this drop, right? We don't know how low it could get, right? Because you see when we entering recession and AWS segment, can they sustain 28%, right? Because let's say 28% now, let's say next quarter it continue to drop. So the share price could continue to drop, right? So I'm not like and buying in a big positions, because I don't know like whether it could be a bottom now, right? Because if I know like it is bottom now, of course I will buy in a larger quantity. But it seems that if we are getting into recessions, result getting worse, this type of share price drop like could drag on for easily a couple of quarters now. So for me, it's I will add slowly now. Okay. Yeah, I'm still adding because I think it's still good companies to invest in. Anyone else want to share your view on Amazon, or do you have any questions that you want to ask on this company? Let's move on. Any reason why the Hong Kong market seems depressed this year across many different sectors? Actually, just now, one of the first questions that there are question asked about what's your view on China stocks, right? So I think I'll just lump it together with these questions now. Anyone here following China markets and want to share your view on Hong Kong or China markets here? I saw Boon left the call already. Anyone else want to share?
Actually, I have a Chinese index. Yeah, so it's doing very badly. It's like 36% down.
Do you have any commentary, like any interpretation on why the Chinese market or Hong Kong markets that drop?
Why? I don't know why. I guess because of the COVID lockdowns. Yeah. I guess they are not. It seems like they are not putting the economy first. They are putting the health of their people. Well, not their mental health, but their physical health, the physical health of their people first. So yeah, I guess that's why their economy is not doing as well as it could be.
Okay. Yeah, I think
yeah, that's what I think.
Okay.
And I don't know whether US recently banned the export of chips or something, right? To China.
Yes, I think we talked about this.
Yeah, so maybe that as well.
Yep. Thanks for the comment. So my comment on this is that okay, first I have to let you all know that I didn't follow that closely on Hong Kong markets. Now, in terms of my portfolio, how much is invested into Hong Kong or Chinese stocks, right? It's getting lower and lower because the share price has been dropping. So I'm one of the back holders, still have my Meituan and Tencent in my portfolio, but I'm not adding for now. Also no plan to sell because they dropped a lot already. So that's one of the reasons. In terms of my interpretation or my commentary on why it drops, right? I think there are two reasons, right? One, of course, is what Mr. A just mentioned, which is like economy-wise, it's not doing that well. I think these are some of the spillover from the drop in the real estate market. I think this could be one, right? And then the other one is the COVID lockdown. I think these are still the case. They are doing a lot of all this restriction. So it hurts the economies for sure. I think this is the economy, general macroeconomics. That's the reason. And then I will add another one, which is the Xi Jinping third terms, right? And I think the third terms is not something that I'm surprised. I think many people already talked about this. The surprising part is that now, if you look at the top leadership in China, I think they are all Xi Jinping's loyalists. So when it comes to their policy, right, I think it will be even more drastic. Say, for example, like when talking about China-US relationship, I think it will get even more stress or tension will increase in the future. The chip ban, I think, is just one of it. There could be more that's coming. For example, like, situation with Taiwan and so on, right? So I think with one person holding so much power and that person is not so much pro-business, my guess is that there are quite a number of, like a billionaire or people who have cash, who have capitals, right? They might just like throw the towel and say, okay, probably it's just not good for me to continue operate in China anymore. Why not I just sell my asset and just move my money outside of China, right? I think people with capitals, right, they have options. They can move to other countries. So I think what happens is that there's some sort of like capital flight move out of China to other markets. The reason I say this is because right after the conference, right, or the, I mean, when the appointments happens, right, the stock market dropped and then the renminbi also dropped. And you can see the fund flows also, that's quite obvious that money flow out of China, I think a couple of days after the meetings. So I think this is quite obvious. That's why my interpretation is there's some capital flights ongoing there. So I'm not sure about, the situation in China, whether it's, I mean, considering all these geopolitics and the macro situations, right? I also not so confident to say that actually China is a good place to invest now, because in terms of economy, let's say they could improve in the future, but you never know, like in terms of their policy, how they will change, right? And you really need to have a good understanding on the direction of the policy in order to anticipate which companies or which sector will do well. So this is something that I don't have much expertise in. And the reason I invested in two companies that I mentioned, right, Tencent and Meituan, is because I think these are the companies that are well managed. That's why I don't mind to keep holding them. But in terms of how well they're able to navigate the futures, also I think this is really questionable. So very hard to navigate when the policy change, right? So I think I'm more like just hold on to it and not doing a lot on these two companies now. I feel that there's a lot more uncertainty when it comes to situation with China and Hong Kong. So that's my view. It's very shallow kind of view, and happy to hear anyone want to contribute on these topics.
Yeah. I also have ICBC shares. Yeah. Actually, I'm quite bullish on this counter, even though now it's around 20% down from the price I bought. Yeah, ICBC it has a very low PE. Yeah, so I think to me it seems very value for money. And in terms of safety, yeah, I don't think ICBC will collapse. I think I'm even confident enough to say that I don't think ICBC will collapse. Yeah, but I could be wrong.
Yeah, ICBC is a bit like the DBS of China, right? So I think
okay,
and they have some state-owned also, right?
From what I read, ICBC is the bank with the largest bank by assets in the world.
The worry is not collapse, right? The worry is nationalization. Like the government says, okay, ICBC worry is not collapse. The ICBC worry is nationalization. Like the government comes in and says that I would like to take a golden share of ICBC at this price, essentially screwing all shareholders. There is an entirely possibility. Or they can say, ICBC, please extend loans to this particular distress segment, and ICBC needs to follow it. There is a concern, right?
Yeah. They are national service, so to speak.
Yeah,
So,
exactly.
Yeah. Though I believe that that's one of the risks. Yeah, you never know what the CCP will get into. Yeah, they are an extension of the CCP, I guess. Good and bad, pros and cons.
I think the national service is really true. I don't think they will just nationalize it unless really the bank go under. They have no choice but have to nationalize it, right? But as long as the company or the bank is doing well, I think they won't simply nationalize it. So that's my view. But when talking about the national service, I think that is ongoing. Like that's the norm, right? So I mean, the CCP will just direct ICBC to do whatever that they ask them to do, right? So the question is more like, okay, now you are the shareholders. Are you well compensated under this kind of regime, right? So I think that's the questions that as an investor you have to ask yourself, and good and bad, because the good thing is that if they have any difficulty, I believe the government will do some policy to help them out. But the bad part is that even if the situations, let's say, improving, the macro is improving, I'm not too sure whether as a shareholder you will get good compensations for the risk that you are taking. So I think that's the thing about all this state-owned enterprise now. Okay, I don't have much to comment on this. Let's move on. Any analysis on T-bills and SSB interest rates trends? When might it peak? I think this is interesting questions because what happened, let's say compared to the last 2 weeks since we met, right? Over the last 2 weeks, actually, the things that shocked me the most is not like all this stock market and so on. Stock market, I mean, the type of volatility that we have been seeing, right? For example, like Meta, big drop. I think this is not new. It happened before. But the one that shocked me is actually the treasury rate, and specifically is Singapore treasury rate. The 6-month treasury auctions it used to be about 3.6% for a couple of different auctions, then suddenly just jumped to 4.19%, right? So it's even bigger than like CPF SA rate. So even for myself, I think for the upcoming auctions, I will put a competitive bid using my CPF OA money. I still have some money there. I'll just bid for, like just take a 4.2%. If I get, I just throw all my OA into the treasury and just earn that 4.2% for 6 months. I think this is really like, I don't know whether this kind of trend will continue or not. I really don't know, because sometimes, let's say there's a slowdown that comes suddenly, right? And we already see some slowdown. If this slowdown comes, sometimes this short rate, it will pause and then it will like collapse, not so collapse, right? Maybe like corrected down quite significantly within a short period of time. This is definitely possible. But if you just look at all the, like the CME implied for the probabilities, right? I think people still expecting Fed to continue to hike at least till early next year. So I think that's the thing. So we have two pictures, right? One on one hand is that everyone still believe that Fed will continue to hike. On the other hand is that we already see some slowdown in terms of the growth, in terms of the corporate profitability, in terms of GDP, all this. I think there's some slowdown already. So where these two will meet, right, is like, I don't know which one will come first. So that's the things that's also easy to predict now. But I think yeah, I can only say that interest rate is very hard to predict. I think it will go up until like go up a little bit, and suddenly it will have a significant correction down. So for those who park money here, as long as you see the rate is nice, maybe you can just lock in some rate first. Don't wait for the like the optimal time, because you will never time the best time to enter. And once it correct, right, then it will so-called the pivot, right? Then interest rate could be like stagnant or maybe slightly down already. Okay, for T-bills, I would say don't predict the timing. You see rate good, just whack. That's the way. As long as you whack the short dated one, I think shouldn't be a big problem, right? Because within, let's say, 6 months or 1 year, one is mature, right? You get back your monies, right? So you don't have a capital risk. But let's say if you buy the longer one, say for example, you say you want to buy TLT, right? Which is like 20 years and above, right? So you are taking duration risk. This one you need to pay more attention, because if you whack at the wrong timing, say for example, you think that okay, my interest rate will come down, like you just buy now, and suddenly the interest rate shoot up by another 1%, right? So you will have a huge capital loss. So that one you have to pay attention and be more careful. You might want to say, even though I want to allocate more into long-term bonds, right? You think that let's say 4%, 4 to 4.5% is good enough, right? You might want to like DCA in rather than just whack in one go because of the capital risk that you are taking. So it's very different, even though we are talking about interest rate, which affect both the short term and the long term, right? The type of risk that you are taking is very different, because ultimately we're talking about like long duration versus short duration. So just pay attention to that. Anyone else want to comment on this? Okay, let's move on. Over the course of time, what is the best advice you have received or lesson you have learned on investing in stock market? Interesting questions, Jay. Very interesting. Anyone want to share on this? For me, I don't have one that is like very, how to say, a very obvious one. I would say that investing is not about like, okay, suddenly I learn investment trick or investment knowledge from someone and then it changed my life, right? I don't think it's like the one-off kind of evolvement. It's more like a gradual kind of evolvement. Like in terms of how we think, right? In terms of how we process all this data, we need to have some kind of framework to guide our decisions, right? But that framework is not something that is rigid. It should be something that more or less there, and then you just keep on building on top of it, and then it should sometimes be flexible as well, and you need to change. I'm talking about the framework, not about like a specific view on certain specific companies, right? So sometimes we need to have some conviction because of what we understand how the world works, right? We need to have some belief in terms of what we know. Okay, that's one thing. And at the same time, we also need to be flexible, meaning that don't be too stubborn. Okay, because sometimes, you know, like people who see that, okay, I have conviction in this company, on this stock, in this sector, then I just whack and the share price drop. There's data point that tell us that, okay, probably you need to reassess your conviction and so and your view in this company, right? And then you just be stubborn and say, market is stupid, those other people are stupid. You just fail to accept that, and you just keep on whack the companies, and then it continue to drop, right? So these are the situation where I often see people lose big sum of money, because if you do it like if you don't have this kind of very strong view, right? You say, okay, let's have some exposure. We see how it goes, and then it's turned out well. I am happy to the DCA, right? It's okay. It turned out bad. I need to keep on reassessing. I think these are all kind of like more measured way of taking risks, right? Usually you won't lose big amount of money if you do it in a slow manner. So. But if you have a very strong conviction, it turned out well, right? For example, those who invested in Tesla in 2017, 2018, right? They say this is a good company. Everyone say this company is failing, never make money. For this group of investor, you can say that, okay, they are great in terms of their assessment, or you can say that they are lucky, right? So they whack, and companies go 10x, they just basically their financial set, right? Because companies turn profitable. Okay. So these are situations where it turned out well. But whereas for people who work in companies high convictions, and then there's data point to show that, okay, maybe you need to reassess, and they don't, right? They just put all their net worth into one company, and that company continue to drop, right? So basically your net worth could be like down by 80%, and that you need 5x to get back to your net worth again, right? So I think that's the situation where, you know, people will lose big sum of money. So sometimes I think you need to balance between like having a convictions, and then at the same time also be flexible and don't be too stubborn. So need to, I think it's you need to balance between these two. I won't say that you must like side towards each of these extreme. Usually extremism doesn't work so well with investment. I prefer to say, okay, when you think that you are too extreme, right? Then better you want to like move towards less extreme end. And if you think that you are the other side, right? Then like for example, you have 100 companies investor, too diversified. Sometimes you want to tell yourself that actually, if I continue to do this, right, without concentration, without conviction, bet also it's hard to attain you know, like a huge payoff in terms of your returns, right? So you might need some concentration as well. So to me, just be balanced now. So I think that's the lesson that I want to share here. Anyone else want to share your view with regards to this, and any lesson or any good learnings that you have learned in the past 1 year? Anything? All right. If no, move on to the last questions. Those on the big cap tech stocks earnings in the recent week, growth is slowing. Big cap tech. Yeah, I think I put up something, right? Let's quickly go through each of them now. Okay, I think just a general view in terms of big cap, right? I think they are all not doing super well. They are all doing worse than say 2 to 4 quarters ago. So this is just generous comment. If you go into details, I think there are some doing relatively well, some doing relatively worse. I would say Apple is considered the best among all, and it is reflected in share price as well, but still worse than what they achieved in the couple of quarters. I think Apple-wise, nothing much to mention other than it's very stable. If you look at their financial statement in terms of their growth and so on, of course, like I mentioned, in terms of FX, they are suffering a bit there. In terms of product roadmap, I think it's quite bad in terms of what they have been launching recently. But yet, in terms of their financial result, they are doing quite well. Services, I think all these are pick up well as well. So overall, I think nothing much to comment on Apple's. Microsoft, I think, is the second one. It's like better than the rest, but also you can see that it's starting to slow down. And that's why all these companies that I mentioned about like cost cutting, trying to streamline, and some of these companies actually exited some of their projects, right? I think later maybe we'll mention a couple more. For example, like Google Stadia, they exited, right? So this period, right, is a bit like adjustment period where they have to see, okay, which are the business that are doing well and they want to continue to invest in them and then make it become like a successful line of business, right? And which are the business line that they think that, okay, this one cannot make it, we need to streamline, we need to cut, okay? So these are the companies or business that they need to exit. So they are doing this adjustment. And even if they do the adjustment now, you won't see like a cost cutting so efficiently within like 1 quarter or two. All this will take time. Like what Mr. Typical Singaporean just mentioned, right? All this actually may take like 1 year or so in order to see their direction in terms of the results. So in terms of Microsoft, I think they are doing okay-ish. Slightly worse than Apple, of course, but still not too bad now. But whether they will continue to slow down or not, we still need to monitor the coming quarters. Google, I think this is considered the bad one, together with Meta actually, because now when we entering recessions, right? Actually, number one spending cut that people actually make is the ad spending. Because imagine companies, right? If you feel that people don't have much money to spend, they're cutting on their spendings, right? Why would you spend so much money in terms of advertising, right? Because you spend advertising, people saw your advertisement, they want to buy also, they have less money to buy, right? So that's why the advertising business is the one that get hit first. So we already see that happening to Google and also Meta. The difference between Google and Meta is that I think Google search is doing well. YouTube is relatively worse because they suffer less from the iOS privacy changes, right? So that's why talking about these two, I think Google is doing better. But definitely Google is like slowing down quite significantly compared to like 1 year ago. But in terms of their valuation, I think it's really attractive already, because digital advertising is not a short-term thing. When we move from like the non-digital to digital, right, this is like multi-years kind of trajectory. So as soon as all this short-term macro pass, right, I think they will go back to growth rate, and they are able to do well there. So I think given that their valuation multiple isn't that high now, so actually it's good time to accumulate and then just bet on the recovery after all these macro headwinds is past now. I think if you just want to bet on the short-term result, I don't think it's good. But if you want to talking about long-term investment, right, and given their valuation multiple is low, I think this is good time to accumulate now. The other big tech, I think Tesla, of course, Tesla is doing well. It's killing it. 50+% growth. I think not many companies have this kind of growth rate, right? So have to give credit to them. Even though their valuation multiple looks very high 1 year ago, but they really deliver it now. So they need to give credit to Tesla. The rest, SML, this one I pay attention to because I also want to hear their statement when it comes to all this US ban and so on, right? Apparently, what they comment is that for 2023, they have no problem because of their backlog. So they are doing fine there. But when analysts ask about 2024, they said no idea. So this is the things, right? They cannot see that long. They can only see 2023, which is 2023, no problem. 2024, if the slowdown continue, even the chip, the foundries, they will cut the capex. All these TSMC, Samsung, they cut the capex and SML, they will be affected as well. And their valuation multiple isn't cheap. So that's the thing on SML. TSMC, I think they mentioned very clearly. There's some slowdown. They ask their staff go for break, go have some vacation, spend time with your family. But that's for, you know, like the 7 nanometer and less advanced one. For 3, 4, 5 nanometer, I think they're still having a lot of backlog, and they're still working at 100% utilizations. But this is true for, let's say, next year. We still don't know whether the slowdown or the underutilizations, right, will hit the advanced process node as well, like the 3, 4, 5 nanometers. So I think that's the things, right? Whether this slowdown, how serious it is, I think even all these companies, they themselves don't know. They have some idea, but they also not sure, right? Because if the slowdown continue, once they have all this inventory built out, right, so they have to cut utilization will drop. And once the utilization drop, right, it actually hurt all these companies a lot, because their expenses is there's huge fixed expenses when they buy all this machinery, all these things, right? Doesn't matter how much you produce, the machinery cost is there, okay? But your revenue will go up and down according to your orders, right? So I think that's the things. If the orders really drop, right, it will hurt their financial numbers very significantly. So this is the risk that you are running as if you are buying all this company. I don't want to say like this is good or bad, right? This is just for every company's, their business model is different, their situation is different. You just want to understand their situations, and then just pay attention to what will be driving their results. But as of now, for TSMC, I would say that for 2023, they are still saying that they are fine there. 2024 is another different story. So I think that's overall comment. I think this is very, like very surface, very shallow kind of commentary. I think if you have time and patience to read the earnings, there's a lot of details there that we can talk about. But let's say if you have any, like if you read all this and you have any like specific points to discuss, right? Of course, in upcoming quarters, we can discuss in more details now. But as of now, because this week we have so many earnings call, I just want to give some like high level sharing, at least based on what I have been reading over the past 1 week. Okay, that's all on these questions. Before we close the call, anyone want to have any questions or anything to share or not? Okay, if not, then thank you. Thanks a lot for joining, especially to Mr. A, typical Singaporean. Appreciate your join and your input here. And Jaden as well. Thanks a lot for coming. All right, see you in the next one. Bye-bye.
Bye.